So now like we are doing the sums that is related to revaluation of assets and liabilities. Are you with me?
Yes, ma'am.
When you
Yes,
are
miss.
revaluing your assets and liabilities, there are two things that you need to consider. What are the two things that you need to consider?
I mean, revaluation account when that there's a good side and a bad side,
If you want the old
right?
values to continue in the
Ah,
books, then what will you do?
if you want the old values,
Then you will
ma'am.
pass adjusting entries.
Okay, okay, perfect. If
If you want a new value, then
you want a new value, then revaluation account.
if you want the new value, then revaluation account. Very good.
Okay.
So I wanted to read this question.
Okay.
Come on, read this question and try
X, Y, and
to
Z.
understand what
Yes,
are
ma'am.
they asking from you. Okay.
Okay.
Take some 2 minutes time, read the question, try to understand, then I'll help you. So what do we want over here is we want the old values to continue in the books.
Yes, ma'am.
Since you want the old values to continue in the books, you have to pass an adjusting entry.
Yes, ma'am. Just take it.
Okay? Since you want the old values to continue in the books, you have to pass adjusting entries. And when you have to pass adjusting entries, how will you do that?
Ma'am. I don't know, ma'am. I didn't get it.
You will find that the net effect of revaluation, your step number one, you will find your net
Yeah.
effect of revaluation, right?
Okay. Yes, ma'am.
Okay.
Net
So you are going to find your net effect of revaluation. How do you find your net effect of revaluation?
the net effect of revaluation, ma'am.
How do you find it?
Uh, don't think so.
All the good things minus all the bad things.
Okay, okay. Minus bad things. Yes, ma'am.
Okay. What are the good things?
Ma'am, where assets increase and liabilities decrease,
What are the
and
bad things?
assets decrease and liability
Assets decrease and liabilities increase.
increase.
Fine. Come on, start over here. This is the thing. You have your assets and you have your liabilities. You have the book value and revised value. I'll classify it into assets and liabilities for your convenience. Debtors is assets or liabilities?
It's I think liabilities.
Debtors.
Okay, okay. Then it's asset.
And liabilities is?
Okay, liability credit. Yes, ma'am.
Creditors is a liability. Come on, tell me.
Okay.
Asset is increasing or decreasing?
I'm increasing.
Okay. How much?
I'm by like 3,000.
Okay. Next,
Asset is decreasing by 5,000.
okay, by 5,000.
Yes, ma'am.
Then,
Then, ma'am, asset is also increasing by 10,000.
okay, then,
Then liabilities is increasing by 400.
then,
Then the asset is decreasing by 10,000.
hmm, then,
Liability is also decreasing by 10,000.
okay. So what are you going to add?
Now we're
Assets
gonna add,
add
yes, ma'am,
and liabilities decrease add.
decrease and
What are you going to subtract?
assets decrease, liability also increase, and asset also decrease.
Okay, very well. So come on. So when you write this, how will you write it?
And how will we write it? Like,
Increase in investments. First, all the add.
yes, ma'am. Okay. Increase in investment.
Investments is how much? 3,000.
3,000.
Increase. Then you
Yes.
have land and building.
Yes, ma'am. For 10,000.
So it is increase in assets and decrease in liability.
Yes, ma'am.
Land and building is how much? 10,000.
10,000.
Then
Then my liability decrease in trade creditors.
10,000.
10,000.
Total is
Total is 23,000.
now what you will write?
Now we'll write decrease in assets and increase in liability.
How much?
Yes, ma'am. Assets
Plant
for
and
plant and
machinery.
machinery, 5,000.
Then
And it will be outstanding expenses
and
for
sundry debt.
4,000. 100. Yes, ma'am.
And sundry debtors by 10,000. So the total is how much?
And 10,000. No, 19,000.
Total is how much? 19,000. This all is subtracted.
Yes, ma'am.
If it's a positive, what is it?
Ma'am, what is it?
It's a positive, what it will be?
Gain on revaluation.
Hmm.
And then if it's negative, then
Yes,
loss,
what
right?
was the gain on revaluation of how much?
Gain of revaluation,
It is of how
3,000.
much?
4,000.
Outstanding expenses decreasing by 4,000 or 400.
400, ma'am, yeah.
So 15,400.
Yes, ma'am.
So gain on revaluation is how much?
Uh,
7,600.
yes, ma'am.
Okay. Now this gain on revaluation has to be adjusted. If it's a gain on revaluation, so the journal entry that you pass for giving the effect of this is gaining partner debit and sacrificing partner credit.
Yes, ma'am.
So for this, I need to find out who is the gaining partner and who is the sacrificing partner. Are you with me?
Yes, ma'am.
Since I need to find out who is the gaining partner and who is the sacrificing partner, what will I do? I have to
And
find
find.
out the share of sacrifice or gain of each partner.
Yes, ma'am.
I will find the sacrificing and gaining ratio. You know how to do it, right?
No, ma'am. Don't remember.
You don't remember. You have a video to even go back and see, right?
Yes, ma'am. I see it.
Okay. So, step number two, I have to find out what share of sacrifice or gain of each partner. So, for this, what will I do? I will
I
first find
will
the
take
sacrificing or gain ratio.
yes, ma'am.
Okay. So I have three partners, X, Y, and Z.
Wait.
Yeah.
Yes, ma'am.
What is the old ratio?
5:3:2.
Old ratio.
Yes, ma'am.
5
5
by
to 3 to 2. 5 by 10.
3 by 10 and 2 by 10.
Yes, ma'am.
Okay. You sure?
Yes, ma'am.
Okay. Then
Then the new ratio.
what is the new ratio?
4 by 10, 3 by 10, and 3 by 10.
Then you will get what?
We'll get the sacrificing and gaining ratio.
Sacrifice or gain ratio. How do you find the sacrifice or gain ratio?
Ma'am,
Old ratio minus new
this
ratio.
new ratio.
So it will be 5 by 10 minus 4 by 10, 3 by 10
3
minus 3
by
by
10
10,
minus 3 by 10.
or 2 by 10 minus 3 by 10.
Yes, ma'am.
If the
From
answer
1 by
is
10.
positive,
Positive, it will be gain, sacrifice,
sacrifice. Answer is negative,
and gain.
it will be a gain. Okay. So I have found. Now I have to find the share of sacrifice or gain of each partner. What
Yes,
do
ma'am.
I have to find out?
Share of sacrifice and gain of each partner.
So how will you find the share of sacrifice or gain of each partner?
Uh,
Okay. So to find out the share of sacrifice or gain,
yes, ma'am.
who is sacrificing? X is
Ma'am, X is sacrificing.
and who is gaining? Z is gaining.
Z.
Okay. So to find this, there is a step over here. Share gained into net effect of revaluation.
Yes,
Yeah.
ma'am.
And again, take this. So to find the share of sacrifice or gain of each partner, it is share gained into the net effect of revaluation. So for
Yes, ma'am.
gaining partner is who?
Gaining partner is a Z.
Z. How much is he gained? Share gained is how much for Z?
Minus 1 by 10.
1 by 10.
Okay, 1 by 10.
Okay. And net effect of revaluation is how much?
7,600.
Gain, or this is the net effect of revaluation.
Yes, ma'am.
It is 7,600. So gaining partner 760.
760. Okay.
Now I go to the sacrificing partner.
Yes, ma'am.
Who is the sacrificing partner?
X.
X. What is the share sacrificed?
1 by 10.
What is the net effect of revaluation?
7,600. So 760.
So 760. Okay.
Yes, ma'am.
So now we have calculated what? We found the share of gain or sacrifice. That was step number 2.
Yes,
Okay.
ma'am.
Now this was what we did was what the step number 3. What was step number 3?
Step number 3 was finding the share. No, no.
Because we calculated
Calculate
proportionate amount.
proportionate amount. Okay.
Proportionate amount of net effect on revaluation.
Net effect. Yes, ma'am.
So we have calculated the proportionate amount. For the gaining partner, it was share gained into the net effect of revaluation. Sacrificing partner share gained into share sacrificed into net effect of revaluation.
Yes, ma'am.
So we have first calculated the net effect of revaluation.
Yes, ma'am.
Then
And
we
we found
find
the
the
share of sacrifice
and gain.
again.
Then we found out the proportionate amount of net effect on revaluation.
Net effect revaluation.
Now we will pass the adjusting entry.
Yes, ma'am.
Adjusting entry, that means step number 4. So since we have a profit on revaluation, yeah,
Yes, ma'am.
so it would be gaining partner debit,
Meaning partner debit to
sacrificing partner credit.
credit.
So it would be gaining partner debit, sacrificing.
Debit sacrificing partner credit.
So what would be the journal entry? Have they told us anything about fixed capital method or anything?
No, they
No.
haven't.
So step number 4 is our main answer. Step number 4
Okay.
is our main answer, where we say what? Gaining
Journal
partner
entry.
debit. This is the adjusting entry.
Okay, adjusting.
So what will it be? Gaining partner debit 760.
Meaning partner debit 760.
Sacrificing partner credit
Sacrificing partner credit 760.
760. So this is our main answer.
Okay.
What is our main answer?
Gaining partner
Capital account debit
account debit X capital
760
account credit.
X capital
Yes,
account.
ma'am.
What have we done?
Yes, ma'am.
Single adjusting journal entries passed for treatment of
Mm.
revaluation of profit.
Yes,
We
ma'am.
done revaluation of profit
Profit sharing ratio.
due to change in profit sharing ratio. So this was our main answer. Okay.
Yes, ma'am.
I want you to solve this sum yourself. So this is the second sum for
Yes,
revaluation
ma'am.
of assets and liabilities. Can you please
Yes,
read
ma'am.
the question for me?
I'm Ashish Akash and I'm as a partner sharing profits and losses equally. The balance sheet as 31st March 2018 is as follows.
Okay, here
So
are some
profits, all
liabilities
profits.
and here are some
Yes, ma'am.
assets. Okay.
Yes, ma'am.
So liabilities, these are the liabilities and these are the assets. If
Yes,
assets
ma'am.
increase and
Then it's
liabilities decrease, it's good thing.
decrease. Yes, ma'am.
And if assets decrease and liabilities increase, it's bad thing.
Bad thing.
Old
Yes,
ratio
ma'am.
is given to you.
Yes.
New ratio is given to you.
Yes, ma'am.
And they have decided on the things. You want to make the new firm.
New fund. Okay.
Okay. So when you want to make the new firm, that means they're asking you to make the new balance sheet.
Yes, ma'am.
New balance sheet at what
Revaluation
value?
account.
New value.
Yes,
Okay.
ma'am.
So you have to find out the new value. So you have to definitely make the revaluation account.
Yes, ma'am.
Okay, so you have to make the revaluation account. Come on. Read. There is adjustment on stock, machinery,
Machinery, land and
building,
building,
and
and
debtors.
doubtful debts. Yes, ma'am.
Stock, machinery, building, and debtors.
Yes, ma'am. Yes, ma'am.
When you're going to make your new balance sheet, whatever has no adjustments will go directly. Are you
Directly,
with
as
me?
in.
They will be
Yes,
just
ma'am.
written as it is.
Okay. Yes.
Okay. Whatever reserves are over here, will go to partners capital account and it will be finished. Whatever reserves are over here again will go to partners capital account and finish
Capital
it.
account.
We will do step number 2 at that time. You will understand this. Right now, our focus is only the revaluation account.
Yes, sir.
Stock is reduced.
Stock is reduced.
Good or bad?
Bad.
And it has become how much?
1,25,000.
1,25,000. So the decrease is how much? The decrease is for 15,000.
15,000.
Okay. Machinery decreased by 10%.
Yes,
10%
ma'am.
of 250,000 is 25,000.
25,000.
Bad thing.
Yes, ma'am.
Okay. Land and building increased by rupees 62,000.
Okay.
So it has
Yes, ma'am. So it's a good
increased
thing.
by 62,000. So this machinery minus 25,000 and land and building plus 62,000. This I'm doing. If we ask you to prepare a new balance sheet, you should know the new values.
Yes, ma'am.
Yeah. So land and
Yes, ma'am.
building appreciated, it's a good thing. You
Yes,
have
ma'am.
to create PDD 5% on debtors. That means the debtors are going to reduce.
Mm.
Yeah.
Yes, ma'am.
So if the debtors are going to reduce, it is again a bad thing.
Bad thing.
So minus PDD 5%. What is 5% of 80,000? It's going to be 4,000.
4,000. Yes.
Okay.
Yes,
Now
ma'am.
you will close the account. The credit side total is more. This is credit side total is more.
More.
So when you close the account, you don't have all this right now.
Okay.
So you don't have all of this right now. And Akash
Okay.
is to carry the reconstitution of the partnership.
Yes, ma'am.
So he's going to get a remuneration of 10,000. So partner's
10,000.
remuneration comes here.
Yes, ma'am.
Partner's remuneration comes where? On the
Bad side.
debit
Debit
side.
side.
The partner's remuneration will come on the debit side. So the revaluation is done. Let's see the journal
Yes, ma'am.
entries for the revaluation. What will be the journal entry for revaluation? First, this side we will do. Revaluation is
Yes, ma'am.
what?
Revaluation is credited and land and building is debited.
So revaluation is credited, land and building is debited. This is the journal entry.
Yes, ma'am.
Okay.
Yes,
Then
ma'am. Revaluation
revaluation
account is debited and stock account and
of
machinery account are
machinery
credited.
account and provision for depreciation
Provision.
of full debts.
Okay. Yes, ma'am.
Revaluation debit and all the three is credit.
Yes, ma'am.
For remuneration, you will pass a separate entry always.
Yes, ma'am.
So it will be
So
revaluation
account debit to Akash capital account credit.
to Akash's capital account 10,000. Are you with me?
Yes, ma'am.
So this entry, and this entry is done. Now you have to close the revaluation account and find the profit or loss on revaluation.
Yes, ma'am.
I am closing the credit side total is 62,000. From the 62,000, I am going to deduct 15,000, 25,000, 4,000, and 10,000. What I'm going to get the profit on revaluation, how much? You got the profit on revaluation or no?
No, ma'am.
So why you said you're done? 8,000.
Ma'am, I was confused after that.
8,000 will
Journal
go to
entry. Yes,
partner's
ma'am.
capital account. Profit.
Yes, ma'am.
And
Okay.
this profit will be distributed amongst the partners Ashish, Akash, and
My gosh, and okay.
in which ratio? Old
The
ratio.
new ratio, old ratio.
Old
Okay.
ratio. 1 by 3, 1 by 3, 1 by 3. Okay. So when you distribute it to their partners in their old ratio,
Yes,
you
ma'am.
will get 2667. And you have to pass journal entry for this also.
Okay, ma'am.
What will be the journal entry for this? Profit on revaluation transferred to partners capital account.
Uh, okay,
Revaluation account.
revaluation account debit to
Ashish capital
Ashish
account
capital account credit. Akash capital account and Amit capital account credit.
to Ashish capital to Akash and to Amit. This is
Amit.
the journal entry to transfer the profit or loss. Okay. General
Yes, ma'am.
reserves has to be given to the partners in old ratio.
Yes, ma'am.
General reserves as a credit balance.
Yes, ma'am.
If you're giving it to the partners, it will be general reserve debit
General reserve debit.
to partners capital account old ratio you have
Credit.
to distribute. First do the sum up till here. Okay.
Yes,
This general reserves is called the undistributed profits.
yes,
Okay.
ma'am.
General reserves is called the undistributed profits, and undistributed profits is given to the partners and is distributed amongst the partners in old ratio.
Yes, ma'am. Okay.
Because the partners are going to get the benefit, partners capital account will be credited
Okay.
and general reserves will be debited. With
Okay.
me? And
Yes,
this
ma'am.
something over here.
Yes.
This is called the undistributed loss.
Okay.
What is it called? Undistributed.
Undistributed loss.
So losses the partners have to bear. So
Yes, ma'am.
since the partners have to bear these losses, we will do partners capital account debit, all partners, old ratio, and the advertisement suspense will be credited. Full 6,000. So this is how
Yes,
you
ma'am.
prepare the revaluation account, give the journal
Yes, ma'am.
entries for revaluation account, and distribute the undistributed profits,
Yes, ma'am.
undistributed profits, and undistributed loss. Okay.
Yes, ma'am.
Undistributed
So
profits,
that's
partners will get the benefit. So partners capital account credit.
credit.
Undistributed loss, partners capital account debit.
Debit.
Okay. So with this, we
Yes, ma'am.
complete this one more sum with making of revaluation account.